Hello friends, welcome back to a new video. Friends, in this video we are doing mock test for accounting paper of JIB. Now please note this is a very important video and all the case studies discussed in this video are very important for your examination. Now in both JIB as well as CIB, the pattern of examination is changing to case study based questions. So it's important that you also change your strategies. Now first let's see what topics are covered in this mock test. Now there will be case study on EMI calculation. Then you will also learn how to calculate interest cost of the loan. Then we will have case study on trial balance calculation. After this we will see question on window dressing. Then we will have case study on accounting assumptions. We will also do a case study on accounting equation as well. Then we will do case study on ratio analysis. Then we will do a case study on balance sheet analysis. And towards end of this lecture we will also do a case study on bonds and yield to maturity. So as you can see, this lecture is full of quality content. So it's must that you focus till last of this lecture. Now friends, before moving ahead, if you haven't subscribed to this channel, then do it now, since this is the only quality channel for all the bankers. Also join our amazing Facebook community where I post lots of one-pagers and other useful content for both JIB as well as CIB. So do join after you finish this lecture. The links are there in description to this video. So let's start with today's lecture and we will straight away start off with a case study. Suppose you purchase a car for Rs 5,50,000 and get a loan of Rs 5 lakhs at the rate of 15% per annum from a bank, and balance 50,000 you pay at the time of purchase. Now you have to pay whole amount of loan in 12 equated monthly installments with interest starting from end of first month. Now answer next two questions based on data given. And the first question is, calculate how much money you have to pay at the end of every month. And the options given are these. Now friends, this is a very good case study and is based on equated monthly installment concept, or EMI in short. Now please note that nothing specifically is mentioned in the case study. But you must know this fact that money you have to pay at the end of every month in case of loan is EMI only. Now the formula to calculate EMI is simply P multiplied by R multiplied by 1 plus R raised to the power n, and whole of this divided by 1 plus R raised to the power n minus 1. Where P is loan amount, R is interest rate per month, then n is tenure of loan in months. Now I would suggest to please remember this formula, as you will be requiring this both here as well as in your CIB as well. So it's better that you master concept of EMI really well. Now in this question, P equals 5 lakhs, R equals 15%, or in months it will be 15 divided by 12 equals 1.25% or 0.0125, and n equals 1 year or 12 months. So just plug in all these values in the equation for EMI. We get 5 lakhs multiplied by 0.0125 multiplied by 1 plus 0.0125 raised to the power 12, and whole of this divided by 1 plus 0.0125 raised to the power 12 minus 1. Now on solving this, you will get Rs 45,070 as monthly EMI. Thus the correct answer for the given question is option C. Now friends, if you are confused how to calculate bigger powers using simple calculator, then please watch my this lecture where I have practically explained how to find bigger powers using simple calculator, which is in fact allowed in your examination. Next question of the case study is, what is total interest cost of the loan? And the options given are these. Now friends, total interest cost of the loan is basically EMI multiplied by number of months minus loan amount. Now EMI we have already calculated in previous question as Rs 45,070. So total interest cost of the loan will be 45,070 multiplied by 12 minus 5 lakhs, which equals Rs 5 lakhs 40,840 minus 5 lakhs, which equals 40,840. So the correct answer for the given question is option A. Now friends, before moving forward with the lecture, don't forget to get your JAIIB Masters pack from the link provided in description to this video. This is a pack of 5 hard copy books, 3 R1000 series question banks of principles, accounting and legal. Then this fourth book is secret sauce book, which is in fact summarized and updated notes of all the 3 papers of JIB. And this last one is full-fledged case studies book with detailed explanations. You can also get individual books as per your needs from the links provided in description to this video. Also, always get updated material since I update all these books after every exam, that is after every 6 months. So don't forget to get your updated material. Next question is, from the following ledger balances, what will be the trial balance of the firm? Now friends, all these ledger balances are given to you and these options are also given to you. Now friends, trial balance is a very important topic and many questions come from this part. Being said that, it is also a scoring topic for non-commerce graduates as well. So please note, while preparation of trial balances, we must take care of following rules or points. First is the balances of all these accounts are always found on debit side of the trial balance. That is assets, expenses account, drawings account, then cash balance, then bank balance or any losses. Then second point to remember is the balances of all these accounts are placed on the credit column of trial balance. That is liabilities, income account, capital account and profits. So let's start segregating all the ledger heads given in the question. First is capital. Now as per our rules, it will come under credit column. The next is purchases. It is an expense, so it will come under debit column. Then next is carriage. It is also an expense, so it will also come under debit column. The next is sales. Now it is an income, so it will come under credit side. Then next is return inwards. Now this will come under debit side. Then next we have salaries. This is also an expense for the firm, so it will come under debit side. Then next we have sundry debtors. Now this is amount that we will receive in future, so as per rules it will come under debit side. Then next we have cash. It will also come under debit side. Then next we have rent and taxes, which are expenses, so it will come under debit side. Then we have drawings. This will also come under debit side. Then we have creditors. These are our liabilities, so it will come under credit side. And finally we have building, which is an asset, so it will come under debit side. So friends, as you can see, we are done with segregation of the heads. Now to get trial balance, just total both debit as well as credit sides. Please note both sides must tally, and if not, then you must have done some mistake. Now as you can see in this question, both sides are tallying and is equal to 1,70,000, which is nothing but a trial balance. Thus the correct option for the given question is option B. Next question is, dash is an accounting practice of manipulating the business results, usually to show a respectable figure of profits more than the real profits. And then these options are given to you. Now friends, the correct option for the given question is option D, that is window dressing. So please note, window dressing is an accounting practice of manipulating the business results, which is usually done to show a respectable figure of profits which are in fact more than the real profits. Now friends, this practice is generally followed by loss-making companies to show themselves as profit-making entities. So for this purpose, the companies may not show some expenses or the expenses may be shown less. On the other hand, income may be shown more than the actual income. Now in banking, window dressing is generally done in many ways. Now some of the common practices is requesting customers to avail some unused limits and transferring them to their savings. Now this not only increases the advances of the branch but also increases the CASA for them. Let's move on to the next question. Which of the following are correct fundamental accounting assumptions? And the first option is consistency assumption. Then second option is going concern assumption. Then third option is accrual assumption. And last option D is all of the above. Now friends, please note the three main accounting assumptions are going concern assumption, then consistency assumption, and lastly accrual assumption. So let's see each one of these in brief. So first is consistency assumption. Now according to this assumption, accounting practices once selected and adopted should be applied consistently year after year. Why? Because this will ensure a meaningful study of performance of business for a number of years. Then second, we have going concern assumption. Now friends, this concept assumes that an enterprise has an indefinite life or existence. So it is basically assumed that business has neither intention to liquidate nor to scale down its operations significantly. And last assumption we have accrual assumption. Now as per this assumption, all revenue or cost are recognized when they are earned or incurred and not at the time when settlement is done. So friends, as you can see, the correct option for the given question is option D, that is all of the above. Next question is, Nasira and Revati are two partners of a firm. The firm receives an order for the goods. Now Revati wants to include it in sales figure, but Nasira opposes it. How will you settle the issue? And these four options are given to you. First option is Nasira is correct. Due to accrual assumption, it should not be included in sales. Then second option is Revati is correct. Due to accrual assumption, it can be included in sales. Then third option is Nasira is correct. Due to consistency assumption, orders are never taken as sales. And last option D is Revati is correct. Due to consistency assumption, all orders are taken as sales. Now friends, if previous question is clear to you, then this question is a cakewalk for you. So please note, merely getting an order from a customer is not regarded as a sale. A sale transaction is complete only when goods are delivered at an agreed price and the customer has paid the money or accepted his liability to the money. Also note, a sale can also be considered complete even though the buyer has not taken the delivery of goods due to his own reasons, and if the ownership of the goods have transferred to the buyer and seller has got an asset in exchange either as cash or as debtor. Thus in this question, because of accrual assumption, we can't include this in sales, and thus in this case Nasira is correct in opposing. Thus the correct option for the given question is option A. Next question is, what are the total capital and cash of the business after following transactions? Now friends, this 6 transaction is given to you. First transaction is started business with cash rupees 8 lakhs and goods rupees 2 lakhs. Then second transaction is cash deposited in bank rupees 5 lakhs. Then third is purchase machinery on credit from Arjun for rupees 10,000. Then fourth one is bought goods for cash 80,000. Then fifth one is paid to Arjun by cash rupees 10,000. And last one is salary paid by check rupees 20,000. Now friends, these answer choices are also given to you. Now friends, this question is based on the fundamental accounting equation, that is this: assets equals capital plus liabilities. Hope you all are familiar with this. Please note, left hand side of the equation shows assets owned by the business and the other side of the equation describes how the acquisition of assets has been financed and claims which exist against the business. So let's start solving this question step by step. Now friends, please note, assets can further be classified into cash, bank balance, stock and machinery. So first transaction is started business with cash rupees 8 lakhs and goods rupees 2 lakhs. Friends, this 8 lakhs will come under this cash head and 2 lakhs will come under stock. Also note, both sides of the equation must tally. So this total, that is 10,000, is nothing but our capital. So in right hand side, this will come under this head. So as you can see, both sides are tallying. Then second transaction is cash deposited in bank rupees 5 lakhs. Now friends, this will reduce cash by 5 lakhs and bank balance will get increased by 5 lakhs. As you can see, net effect on the equation is nothing here. Thus revised equation becomes 3 lakhs plus 5 lakhs plus 2 lakhs equals 10 lakhs. Then third transaction is purchase machinery on credit from Arjun rupees 10,000. Now friends, machinery is also an asset, so machinery will get increased by 10,000 on left hand side, but also note, since this machinery is purchased on credit, so liabilities will also get increased by 10,000 on right hand side. Thus revised equation becomes 3 lakhs plus 5 lakhs plus 2 lakhs plus 10,000 equals 10 lakhs plus 10,000. Then fourth transaction is bought goods for rupees 80,000. Friends, since goods are bought by cash, so cash will reduce by 80,000 and then stock will get increased by 80,000. Thus revised equation becomes 2 lakhs 20,000 plus 5 lakhs plus 2 lakhs 80,000 plus 10,000 equals 10 lakhs plus 10,000. Then fifth transaction is paid to Arjun by cash rupees 10,000. Now friends, in this, cash will decrease by 10,000 and on the other hand liabilities will get decreased by 10,000. Now can you answer why? Please note, we purchased machinery on credit in third transaction from Arjun, so this fifth transaction is nothing but repayment of our debt. Thus revised equation becomes 2 lakh 10,000 plus 5 lakhs plus 2 lakhs 80,000 plus 10,000 equals 10 lakhs. Then finally, sixth transaction is salary paid by check rupees 20,000. So in this transaction, bank balance will get decreased by 20,000. On the other hand, capital will also decrease by 20,000. So friends, our final equation will be 2 lakhs 10,000 plus 4 lakhs 80,000 plus 2 lakhs 80,000 plus 10,000 equals 9 lakhs 80,000. So as you can see, final cash is 2 lakhs 10,000 and capital is 9 lakhs 80,000. Thus the correct answer for the given question is option C. Friends, I hope the question is clear to you. If you are facing any doubts, then you can post your doubts in comment section. Next question is, which of the following statements is correct? And the first statement is, check issued but not yet presented for payment do not make any difference in bank balance shown by cash book with that of passbook. Then second statement is, the passbook of the account holder is the copy of the relevant account in books of a bank. Then third statement is, A bank reconciliation statement is prepared to ascertain the cause of differences in the cash column of the cash book and the bank column. Then fourth statement is the bank reconciliation statement is prepared by the bank. Now these four answer choices are also given to you. Friends, let's analyze each of these statements one by one. Now first statement is false. Please note check issued but not yet presented for payment does make difference. The balance shown by cash book will in fact be less than the balance shown by passbook by the amount of the check. The next statement is true. Please note passbook is actually a copy of customer's account in the bank. Then next statement is false. Please note a bank's reconciliation statement is prepared to find the causes of the difference between the bank column of the cash book and the entries shown in the passbook. And finally, statement 4 is false. Please note a bank reconciliation statement is in fact prepared by the business or the firm maintaining a bank account. So as you can see, only statement 2 is correct. Thus, correct option for the given question is option C. Next question is, friends, this is in fact a case study. Given are the account balances of a firm. Now friends, all these balances are given to you. Now answer next 5 questions based on data given. And the first question is, what are net purchases? And the options are given to you. Friends, net purchases will be simply purchases minus purchase returns. Now purchases are given as rupees 25,000 and purchase returns are given as rupees 1,000. So net purchases equals 25,000 minus 1,000 equals rupees 24,000. Thus the correct option for the given question is option C. Next question is, what are net sales of the firm? And the options are given to you. Friends, if you understood the previous question, then you can easily attempt this question as well. Similar to net purchases, net sales will also be sales minus sales returns. Let's put both these values from the data given. Sales equals 60,000 and sales returns equals 2,000. So net sales equals 60,000 minus 2,000 equals rupees 58,000. Thus the correct option for the given question is option B. Next question is, what are direct expenses of the firm? And the options are given to you. Friends, let's aggregate all the direct expenses from the data given. Now direct expenses are factory rent, carriage, octroi and wages. Now those of you who are confused what an octroi is, friends, octroi is basically charged at the point of entry of goods into a local area of consumption, use or for sale in that area. Now let's put all these values into respective direct expenses. We get factory rent as 3,000 plus carriage that is 3,000 plus octroi that is 7,000 and lastly wages that is 7,000. On adding we get 14,000. Thus the correct option for the given question is option C. Next question is, what is cost of goods sold? And the options are given to you. Friends, COGS is simply opening stock plus net purchases plus direct expenses minus closing stock. So let's substitute all these values given in the question. So COGS will be simply opening stock that is 15,000 plus net purchases that is 24,000 plus direct expenses that is 14,000 minus closing stock that is 12,000. So COGS will be simply rupees 41,000. So the correct option for the given question is option A. And the final question of our case study is, what is gross profit of the firm? And these options are given to you. Friends, gross profit in this case study will be simply net sales minus cost of goods sold. Now we have already found both these in previous parts, which equals 58,000 minus 41,000 equals 17,000. So the correct option for the given question is option C. Next question is, this is also a case study of 5 questions. Now given is the balance sheet of the firm. Now friends, this balance sheet is given to you. For next 1 or 2 minutes, just pause the video and look at this balance sheet carefully. Now answer next 5 questions based on data given. And the first question is, what are total fixed assets? And these options are given to you. Friends, fixed assets are purchased for the purpose of operating the business and not for resale, as these are required in the business for longer time period. Now in the balance sheet given, the fixed assets for the firm are, first is freehold premises that is rupees 40,000, then plant and machinery equals 32,000 and lastly furniture and fittings equals rupees 8,000. So total fixed assets will be sum of all these, that is 40,000 plus 32,000 plus 8,000 equals rupees 80,000. Thus the correct option for the given question is option D. Next question is, what are total current assets of the firm? And these options are given to you. Friends, I hope you know what current assets are. Please recall that current assets are kept for short term and are required for day-to-day business activities. So in the given balance sheet, current assets are, first is stock in hand equals rupees 48,000, then trade debtors equals rupees 36,000, and lastly rent prepaid equals rupees 400. So current assets equals sum of all these, that is 48,000 plus 36,000 plus 400 equals 84,400. Thus the correct option for the given question is option A. Next question is, what are total current liabilities of the firm? And these options are given to you. Friends, current liabilities are the obligations to be met in near future, generally within a year. So in the given balance sheet, current liabilities will be, first is trade creditors equals rupees 42,000, then second is expenses accrued equals rupees 3,200, then third is bank overdraft equals rupees 4,800, and lastly we have interest accrued on long-term loans equals rupees 1,000. So friends, the total current liabilities will be simply 42,000 plus 3,200 plus 4,800 plus 1,000 equals rupees 51,000. Thus, the correct option for the given question is option C. Next question is, what is working capital of the firm? And these options are given to you. Friends, working capital is simply current assets minus current liabilities. We have already found both these in previous questions. So, working capital of the firm will be 84,400 minus rupees 51,000 equals rupees 33,400. Thus, the correct option for the given question is option B. Next question is, what is capital employed for the firm? And these options are given to you. Friends, total capital employed by firm will be this capital, and we will also add this long-term loan to the capital employed, since this is also employed straight to the business. So total capital employed will be simply 93,400 plus 20,000 equals rupees 1,13,400. Thus, the correct option for the given question is option D. Friends, I hope the case study is clear to you. Let's move on to the next question. Now, this is also a case study from the topic bonds. Please note, bonds is favorite topic of IIBF in both JAIIB as well as CIB. So it's must that you master this concept. Now the case study goes like this. Given the following information regarding bond A and bond B. Now friends, as you can see, for both bond A and bond B, face value is given, coupon rate is given, then interest payout frequency is also given, then issue date is given, then issue maturity date is given, and finally market value is given. Now answer next 5 questions based on data given. And the first question is, which of the bonds is trading at a premium? And these options are given to you. Now friends, please note, for coupon bonds, now this means excluding zero coupon bond, if market value equals face value, then bond is said to be at par. Then next is, if market value is greater than face value, then bond is said to be at premium. And lastly, if market value is less than face value, then bond is said to be at discount. Now, when you look at both these bonds, you can see market value of bond B, that is rupees 950, is less than face value of bond B, that is rupees 1000. But for bond A, market value, that is 1050, is greater than face value of the bond B. But for bond A, market value, that is 1050, is greater than face value of the bond, that is 1000. So as you can see, out of 2 bonds, it's bond B that is trading at a discount. Thus the correct answer for the given question is option B. Next question is, what is annual coupon payment for both the bonds? And these options are given to you. Friends, annual coupon payment of the bond A will be simply coupon rate multiplied by face value. That is 9% of 1000 equals 90 rupees. Similarly, for bond B also, coupon annual payment will be 9% of 1000 equals 90 rupees. So as you can see, for both the bonds, payment is 90 rupees. Thus correct answer for the given question is option A. Next question is, what is current yield of bond A? And these options are given to you. Friends, current yield is calculated as current yield equals annual coupon payment divided by market value multiplied by 100. Now, annual coupon payment we have already found in previous question, that is 90 rupees. And market value of bond A equals 1050. So, current yield will be simply 90 divided by 1050 multiplied by 100 equals 8.57%. So the correct option for the given question is option B. Next question is, what is capital gains for the investor in case of bond A? And these options are given to you. Friends, capital gain is simply market value minus face value. So in case of bond B, face value equals 1000 and market value equals 1050. So capital gain will be simply 1050 minus 1000 equals 50. So the correct option for the given question is option D. Friends, finally we have reached the last question of our case study as well as this lecture, and the question goes like this. Yield to maturity of bonds A and B are, and these options are given to you. Friends, this is a very important question. IBF usually asks yield to maturity calculations in examination. Now the easiest way to calculate yield to maturity is using this relation. So please note down this relation as well as remember this. That is, yield to maturity equals F minus P divided by N plus C and whole of this divided by F plus P divided by 2, where F is par or face value of the bond, P is price of the bond, N is the time to maturity of the bond, C is annual coupon payment. Now all this data is given in the question for both bond A and bond B. Let's calculate yield to maturity for both these bonds. So yield to maturity for bond A will be 1000 minus 1050 divided by 10 plus 90 and whole of this divided by 1000 plus 1050 divided by 2. On solving this, we get 85 divided by 1025 equals 8.29% approximately. Similarly, yield to maturity of bond B will be 1000 minus 950 divided by 10 plus 90 divided by 1000 plus 950 divided by 2. On solving this, we get 95 divided by 975 equals 9.74%. So as you can see, the correct answer for the given question is option C. Friends, I hope all these case studies discussed in this lecture are clear to you. All the questions which I have discussed here are important, so please revise this again and again before your examination. Also, there are many other mock tests and lectures I have already published on our YouTube channel. The links to all the previous mock tests and other lectures is there in description to this video, so don't miss out all those important lectures before your examination. Lastly, links to all the resources is there in description to this video, so don't miss out to get these and practice well before your examination. So with this, I wind up this lecture. Thank you, and I will meet you again in another lecture.